to another episode of Future Money. We're going to talk about Bitcoin. We're going to talk about Onyx. We're going to talk about where Bitcoin is going, why we aren't already where we're supposed to be. We got a lot to talk about today. We're going to talk about first where Bitcoin is at right now. Right now we're at about, let me bring the chart up so we make sure that we stay on track here. Bitcoin's at 97,000 right now. Now I want to show you something because a lot of people don't realize how early we still are with Bitcoin. So I'm gonna put the all-time chart up because I want people to see this. So let's look at the last cycle, right? As we look at 2017, in 2017, I did some research over the weekend, a lot of research, because a lot of people was asking me, why hasn't Bitcoin got to 200, 300, 400, 500 by now? Why are things so slow? Why hasn't altcoin season, in which all the altcoins start to go up after Bitcoin's rise, why hasn't it happened yet? Well, there's a simple explanation, is that we were very, very early in Bitcoin achieving all-time highs this cycle. And that was pushed by the ETFs, that was pushed by institutional investors, that was pushed by the banks, the elite and the rich, understanding what Bitcoin was and buying it up. Now, people say, why do I talk about Bitcoin so much? It's because Bitcoin is the driver of the market. It always has been. Bitcoin moves up first, the second coins come up later. It's called altcoin season. So for us to see XRP reach the peaks that it's going to reach, Bitcoin has to drive that market. XRP, Ethereum, Solana, all of these coins that we love are not going to reach their peaks if Bitcoin is held down because it's the market driver. Same thing happens. Like for example, in AI, we have Palantir, we have SoundHound, which is going to do extremely well over the next 6 months. Make sure you listen. I'll talk about SoundHound at the end, but SoundHound is undervalued severely in comparison to all the other AI stocks. In comparison to Palantir, in comparison to NVIDIA, it has so much potential from where it's at now. We'll talk about that later though. But do you remember what DeepSeek did to AI? All AI stocks fell. It was a temporary thing. It was an overreaction. It was a panic. But all AI stocks went down because it was a threat to the chiefs of AI, NVIDIA. It was because they use actually cheaper NVIDIA chips. It was a threat to OpenAI. So everything fell. So the person or the company or the organization or the asset at the top drives the whole market. So if Bitcoin does not do what it's supposed to do this cycle, we can forget about XRP, at least in the short term. We can forget about Ethereum, at least in the short term. We can forget about Solana. We can forget about all these meme coins, which I don't agree with, but people still trade it. Because if Bitcoin doesn't go up, nothing else is going to work. So we have to focus on what Bitcoin is doing. We have to focus on analyzing Bitcoin. And we got to predict where Bitcoin is going over the next few months, over the next few years. We have to do that in order for all of our other coins to go to where they're supposed to go. But let's take a look, because I want you guys to remember how early we are and why altcoin season has not happened as of yet. Now, if we look at Bitcoin's chart, we're at 97,000, right? We got the all-time chart right here. So I want to show you something, right? Is that December 4th, 2000, remember that Bitcoin has went through three halvings. The first one was around 2013. Now, Bitcoin reached its all-time high at 1,100 during that cycle, right? So Bitcoin then went through a 70% retraction, and 80%, I think it was almost 90% that cycle. It may have been 80, 90%. And when that happened, it took 1,177 days to recover. Almost, what is that, I think it's like 4 years almost? Almost 3.5 years to recover. So we move on to the halving in 2016. During that year, Bitcoin, at the end of 17, Bitcoin reached its high of right under $20,000, which was $19,500, roughly $19,500. And we can see that here, right? Bitcoin took another 1,096 days to reclaim that high. So then we move on to this last halving, right? Is that in 2024, the halving that we just went through. Bitcoin reclaimed its highs before that, before the halving. So it took Bitcoin this time from where it was before to where it ended up passing all-time highs again, or sustaining all-time highs. It was 837 days. That puts us on average 200 days ahead of where we should have been. 200 days. That gives us an additional 6 months. So it reclaimed its all-time high in March. I'm sorry, let me see. It reclaimed its all-time high, March. So we got April, May, June, July, August, September. That September was when Bitcoin should have, around that time, reclaimed its all-time highs. But because we had ETF involvement, because we had institutions investing, because we had retailers not even in yet, we saw those highs a lot earlier than we saw them in the past. And that's the reason why altcoin season hasn't happened. We're just early. Now, I need you guys to subscribe to the channel. I need you guys to drop any comments. You want me to talk about something on Wednesday? You want me to discuss something? You want me to analyze a coin? Drop it in the comments, and I would love to see that. So I want to talk a little bit about altcoin season. And it's only, if we go back to the entire history of altcoin season, now we have to look at the altcoins that have been around, at least 2 of the cycles. So we got to look at Litecoin, even though a lot of people don't like it now. And it's considered an old coin, even though there's no such thing as an old coin. We got to look at Ethereum, and we have to look at at least those 2 to understand where everything's going. So now if we remember, when Bitcoin reclaims all-time highs, that's considered the beginning of the bull run. Now, in every single instance before this one, it was the beginning. And even in this time, it was the beginning, but we were very, very early. So once Bitcoin begins this bull market, how long does it take for the top 2 altcoins that have been around since then to reclaim their all-time highs? Now, I want to tell you, so the Bitcoin bull run started early this time. But if we look at where it should have been, we look at the 2 coins, we look at Ethereum. Ethereum took 328 days after the initiation of the bull run to reach its all-time highs. Now, that would put us at March of this year, a little bit earlier than that. But remember, our cycle was faster. So if you add like half of that, 100 more days, that puts us to somewhere April, May, June of this year, when we'll see altcoins start to do well. Now, we're early, so it will probably happen earlier than that. But I just wanted to let you guys know that we're very early in this. Altcoin season is coming. We're just early. That's it. And then we look at Litecoin. Litecoin took 331 days after Bitcoin's in 2016, after Bitcoin's bull run began, a sustained high above the previous high. Then it took 331 days after that for Litecoin to reclaim its all-time high. So altcoins are always roughly 300 days behind the initiation, 340 days behind the initiation of the Bitcoin bull cycle. So that's the reason why we're late. And a lot of people are scared. I'm going to sell everything now because they're panicking. Panic is your worst enemy. If you panic, you're going to lose everything. I had a guy one time, I put a post up this week, and I was talking about the XRP. And he responded, he put a comment in there, "You cost me $10,000. Oh, I think he said $80,000. Ah, you're a scam. First of all, I don't know how I'm a scam. I can say whatever I want on my social media. I mean, I'm not charging people for this. So I can say whatever I want. So I don't know how he's scamming. But I looked at the data. I looked at the charts. How could he possibly have lost that much money during a time when XRP has either went way up over the last 100 days or has at least sustained a high above that, but very, very high. Remember back in November, we were at 40 cents. We're at about what? I think $2 and something today. So even at any time you could have bought XRP, except for the last 2.5 weeks and you'd be up. Last 3 weeks, you'd be up. So how could he possibly lose that much money? And it's a simple answer. He panicked and sold everything he had because it was easier for him to sell than it was for him to go through the panic, manage the panic, and calm himself down. It's easier. As soon as you sell it, you don't have to panic no more. That's an alleviation of the extreme emotions that you're feeling. You can't solve those emotional problems with actions. You solve emotional problems by controlling those emotions and then thinking rationally without trying to not let the emotions be part of the decision. Now, if he wanted to sell, he thought it was going down, that's okay. But he panic sold. And that's the reason why he lost so much money. Got 1,000 people watching there. If you're new, please subscribe to the channel. And I also like the video. I got 17 likes, it looks like, but there's 1,000 people in here. So we should at least have 300-400 likes. So if you're in the chat, please like the video. Drop a comment. We got 139 likes. So I need you guys to like that video. And also subscribe to the channel, please. We got 1,100 people in here right now. So next thing I want to talk about is Bitcoin's $500,000 prediction. So Kathy Woods has predicted Bitcoin will reach 500,000 this cycle. I'm sorry, 1 million before 2030. I think Mark Cuban also did the same prediction, 1 million before 2030. We're at 2025, right? So that puts you at a 10 times gain in 2025. A lot of people, I think we're going to 250. That's what I've always said since last year when I spoke on the New York Stock Exchange. I said that 250 was where we were going to be. This was in 2023. Bitcoin at the time was like 25,000. And I said we'd be at 100 before the end of 2024. People said I was crazy, didn't know what I was talking about. We clearly met it a month before that. And then a month and a half before that. And then secondly, I said we'd be at 250 by the middle of this year. And I said this almost a year and a half ago, end of 2023. At the time, I was crazy. At the time, I didn't know what I was talking about. But now, everybody knows I knew what I was talking about. And that was all based on the past history of cryptocurrency, especially Bitcoin. There's a pattern here. There are patterns that continuously repeat themselves. One time I was on the ocean and I was watching the waves, right? If you know what a fractal is a repeating pattern that happens a lot in nature. It repeats small, then it also repeats large. So you can put a bunch of small repeating patterns together and they'll create the same pattern but much larger. That's what a fractal is. So it's like a snowflake. Snowflakes have fractals. A lot of things in nature are fractals, right? Bacteria growth, I believe, is fractal. Now, fractals represent how things grow, how things move a lot of times in nature. One time I was on the ocean and I'm looking at the ocean waves and the ocean foam would break on the coast or whatever the coast, I guess. And I would notice that the patterns in the foam were fractals. That means there were small patterns. If you look at the big one, there were a big pattern. And that was amazing to me. But these patterns, these fractal patterns, these repeating patterns exist in cryptocurrency. The halving cycle is 4 years. Every Bitcoin I create every 10 minutes. These are repeating patterns, right? And these patterns tell us where things are going. If you understand the patterns, if you watch the patterns, you don't let panic overwhelm you, it's easy to make these decisions. It's easy to see where it's going. Now, Bitcoin going to 1 million before 2030, I believe that we'll be probably past that. I think that this cycle, and the thing about it, we can see by blockchain analysis, we can see that the retail involvement in cryptocurrency is not there yet. And I can tell you why right now. Go to work, talk about Bitcoin. Go to the barbershop, talk about Bitcoin. Go down to the beauty salon, talk about Bitcoin. There is no average people talking about cryptocurrency right now. Go back to the previous cycle, 2020, I walked into Starbucks, the baristas were talking about it. Go back to the cycle in 2017, my mother knew about it, but nobody's talking about it because remember, most people still think it's a scam. They don't even know what's going on. They know that Trump talks about it, but they don't know what's going on. They don't even pay attention. They think it's still a scam. And these meme coins actually add to I don't like meme coins at all. I actually hate them. I was hoping that this current administration would do something about meme coins, but they didn't. I have no idea why they didn't. They should have. I guess because Trump launched his own meme coin. I guess he can't go after it now. So I was hoping, because I think that for the average investor, and remember, whenever you have an investment out there, stocks, crypto, whatever, you have to position it so the average man can understand it, the average man or woman can trust it, and the average man or woman can hopefully profit off of it. Now, with meme coins, most people are unprofitable. Meme coins have a high incentive. That's the problem. It's a problem on the scammer side, and there's also a problem on the demand side, I guess supply and demand side. The problem with the supply side of meme coins is that, just like I told you with NFTs, is that whenever there's something out there in economics, it don't matter what it is, and it's in my book. Remember, that's another thing I want to tell you. I got a book deal with Wiley Publishing, 2 books over the next year. So I can't sell this first edition no more after February 28th. So that's it. because I gotta shut down sales February 28th. They're gonna release a second edition third quarter of this year, a lot bigger, because I thought it was gonna be bigger, a lot more information, a lot more stories. So I can't sell it after the 28th, so make sure you pick it up on Amazon. It's gonna have to come off Amazon. I can't sell it for the next 28 days, for the next months. So make sure that you buy that book before the 28th. So the first book is going to be a rewrite of Strategic Millionaire. The second book is going to be called The Future of Wealth, the next 50 years of crypto, humanoid robotics, technology, and AI in creating wealth. That's the name. That's the working title. I don't know what they're going to change it to or help me out with, but that's the working title. So it's going to talk about where things are going over the next 50 years, how you can profit from each new innovation, and how each new innovation will change not only economics, but social and everything else in our lives. So it's going to be a great book. Hopefully it'll be released sometime end of this year, early next year. So like I said, I'm very excited. I'm gonna spend a lot of time writing over the next 3 months. So I won't be traveling as much, but so back to what I was saying about meme coins, right? Is that we talk about that in the book. It's called market inefficiency, right? Is that that happens all around us, but you exploit market inefficiency when you make money off stocks, whatever, you get into a business. It's all exploitation of market inefficiency. So if we look at meme coins, you got the supply side, people who create meme coins. You got the demand side, people who consume, buy, and whatever, and invest in meme coins, right? The problem with that dynamic is that the same thing happened with NFTs. I'll tell you, if you guys have been following me for so many years on Instagram, I'm mostly on Instagram. I just started YouTube, really. Started being more active on YouTube. I should have done this a while ago, but I was traveling so much. It was very hard to do, but I'm not gonna travel this year that much. So we look at that dynamic, right? And it was the same dynamic of NFTs. In that dynamic, the supply side, you have a huge, huge incentive to create NFTs. It's a low barrier to entry. Anybody can do it. You can go to Fiverr.com. They tell you, you just pay somebody $50, you can create a meme coin or NFT. But the potential profit is so large that what happens in that dynamic is that it becomes lopsided. Well, like this. Is that so many people, so many idiots, create meme coins and NFTs. That's 50,000 a day right now. That the supply side comes overwhelmed. So the only way they can stand out is by scams. So the scams enter the market. On the demand side, what happens is, this is the bad part for us, is that the average investor doesn't understand what a good return is. And I hear this all the time. We talk about it on the podcast with Robert Crow. A good return is 9 to 13% a year. If you have a hedge fund that returns 13% consistently over 5 years or 10 years, you have no problem with obtaining capital. You have no problem with attracting customers. People will break down your doors for 13% a year. That's extraordinarily high. Now, stocks sometimes do better. Remember, stocks also retract some years. So the stock market on average is about 9%, 10%. Real estate is about 11%, but you have to do all the work and you also have liability. Giving money to a hedge fund or some type of fund, 13%, you don't have to do nothing. You walk away, that money grows on its own. And that's what I'm talking about here, is that 13% is an incredible return, but the average investor in crypto sees it as nothing. It was some videos that came up after XRP hit where it's at now, when it went from 40 cents to I think 380 or 370. People said that's nothing. They picked some random meme coin. This went up 100 times over the last 6 months. This went up, XRP did nothing. Any investment that you can get that's over 13% is extraordinarily well. So I say that to say that Bitcoin, from where it's at today, going in 2030, going to $1 million is an incredible return. And the thing about the return is that we always have to count risk in our investments. The risk on that is extraordinarily low. The risk is called risk versus reward ratio. That means how much risk in comparison to how much potential, how much return you can make. And then you want a ratio that's pretty good, that that the risk is not extraordinarily high. Now, in meme coins, the potential for return is extraordinarily high, but the risk is also high. So that's not a good ratio. Look at Bitcoin, the return is still significantly high, but the risk is lower than what the perceived risk is. That ratio is something you want. A lower on this left side and a higher on the right side. Now, meme coins are both high. You don't want that. That doesn't work, right? Because the risk is extraordinarily high. It almost cancels out any kind of returns that you can make. But on the demand side, what's going to happen is that people will eventually stop trusting crypto at all, because the incentive is, most people don't know this ratio. Most people that invest in crypto, most newbies, throw this side out completely. Forget that. Risk. One time a dude told me, I said, always manage risk. He said, scared money don't make no money. What are you, weak? Because I said, no, I'm not afraid of risk. I manage and mitigate risk. That's a big difference. It's not, I'm afraid of risk. A risk is a variable. I'm not afraid of it. It's just a variable to me that I use when I choose my investments. So what happens there is that a lot of people, they start to distrust cryptocurrency because everybody's going to get burned by a meme coin. And now the thing about meme coins, and I'm gonna go on, I'm gonna stop talking about them. We still got some other stuff, Oklo, XRP, we still got Onyx to talk about, but I wanna continue, I wanna finish this, is that people who invest in meme coins that don't manage risk, think about this. How many people do you know that you know personally that made money off NFTs or meme coins? Some of you guys say, yeah, I know this guy. Now, the same question is, does he or she still have the money? Now, what you'll see a lot in cryptocurrency NFTs is that people only post their wins. You don't ever see nobody, I post my losses, but some people, I don't do that many trades a year, so I could post my losses. I'll tell you when I miss something. But most people only post their wins. You never see their losses. So you believe that this person is always winning when they're actually losing a lot, right? So, and the second thing that happens too is that a person in your life will show you, look, man, show you a screenshot. I just made $300,000 in monkey coin or something, I don't know, or a golden ape or whatever NFT. And you say, man, that dude has a lot of money. What you gonna do with the money? He said, oh man, I'm thinking about it, I don't know, man. And then you come back to the dude and you say, hey man, you gonna spend that money? He says, nah, man, you know what I did? I put it in the bank. I'm gonna put that in a trust fund for my kids. Oh man, that's a smart idea, man. Yeah, I know my boy. He made $300,000 in NFTs, but he put it in a trust fund for his kids. That was smart, man. He's a smart man. That's a smart man over there. He's really protecting his kids. He really told you that because he don't have the money no more. He put in 3,000, he made 300,000. He's been convinced that he could take that 300,000 and make 3 million. And he put it right back into another investment, lost it all, and he's ashamed to tell you, so he tells you, oh yeah, I put it in a trust. Oh yeah, I'm gonna keep that money. Oh yeah, I'm gonna buy a house with that down the line. Most people will never tell you their losses. I know a lot of people that made a ridiculous amount of money in their NFTs, meme coins, and they lost it all because they didn't manage risk correctly. They were confused. They were confused in their mind that they were actually great investors because they got in, made a good investment. And they forgot to manage risk. So always manage risk. So one thing I want to talk about, before we do, I need you guys to subscribe to the channel. I need you guys to like the video. We got 400 likes, but we got 1,200 people in here today. So I need you guys to, and if you watch this video, if you want me to analyze a coin, you want me to talk about something else, put it in the comments and I will talk about it next. If you're in the chat, after this video post, put a comment under there and what you want me to talk about on Wednesday at 10:30, and I'll talk about it. So we'll talk about Onyx at the end of the hour. So the second thing I want to talk about is we're going to talk a little bit about Oklo. Then we'll finish the hour talking about Onyx. Right? So back to Bitcoin. Bitcoin is going to 100 million over the next 5 years. That's an incredible return. A lot of coins are going to go way up. People say XRP can't do this or that. XRP is, by then XRP had to be past 100, maybe $250 at that time. Now, a lot of people, I put up a video and it got 30,000 views the first hour on YouTube. You guys should watch it. I put up a video describing where XRP was going, all the innovations that were happening, all the partnerships, and I said I think that it would take 5 years for XRP to get to 250. A lot of people got mad at me. It's going to happen this year. I don't believe it's going to happen. Now, I try to be rational here. There's two sides to the argument. there's people that say that XRP could never get to a certain amount because of market cap. I don't agree with that. I think market cap doesn't make sense with crypto. We should throw it out. That was brought on by Forex traders. It was brought on by stock traders, day traders, to try to corral cryptocurrency into something they can understand. And that it's Bitcoin and crypto in general has been corralled in this way of thinking for like 5-6 years that didn't exist before 2017. I remember when I first invested in Ethereum 2015, there was no charts. There was not one chart on Ethereum. You had a price, a current price that was on CoinMarketCap. The charts didn't exist yet. And then and CoinMarketCap had no historical lookup. They actually archived their old HTML page. That was their historical lookup back then. If you want to see what a price of a stock was 6 months ago, it was a list, and you have to click on the date, and it was an HTML backup of that day. And that's what the price was for that day. It was no charts. It was the current price, and you could look up a price on any given day. That's it. There was no charts. So all this stuff got forced into crypto by these people because they didn't understand crypto. They saw it as an asset, so they believed an asset should be treated as a stock, but it's not. So market caps don't even make sense. Secondly, on the other side of the equation, these people think that XRP could go to 10, 100,000 in a few years. That is also impossible. Now, what's wrong with getting 50 this year? What's wrong? It's at $2. It was at 40 cents. That's 50 times gain. What's wrong with over 5 years getting to 100? What's wrong with over 5, 6, 7 years getting to 250? There's nothing wrong with that. Just wait and be patient. Stuff don't take, it's not instant. It takes time for these things to grow. And that's just how it is. Adoption with technology is a slow process. It takes a long time. It takes a very long time in some cases. Can you talk about not reaching your strike price on options, but when the price goes up on a call, do you make money? Yeah. So Sergio asked a question about options. He said, can you talk about reaching your strike price on options, but the price goes up on a call? Do you make money? Yeah. So you can have an option, right? Let's say a call option. Because you didn't say if it was a call or put. Let's say a call option. So you have a call option. Let's say you got Apple at, I don't know where Apple's at. Let's say Apple's at 200. So you say in a year from today, a year or whatever the expiration date is from today, I want to have an option. I want to buy this option on Amazon. Now Amazon's at 200. I don't know where it's at, so I'm just saying it's at 200 just to be safe. And I'm going to do my call option for 500, right? And now I do that play. So it may only be a few dollars, because I mean, Apple probably won't reach that high in a year unless something crazy happens. You may only pay like cents for that one, because it's highly unlikely that you'll be able to exercise that option in a year. So it may be, let's say it's 50 cents per times 100 to buy the option, right? So you pay $5, you get a contract. So let's say over the next 3 months, let's say over the next 6 months, let's say the next 3 months, that the Apple goes to 300. Now your call option that expires in almost just under a year now, it's still at strike price 500, and it will go up from, let's say, 50 cents. Now it's worth $1.50, and you can sell that call option and make money. Now, whenever we get to that expiration date, it expires worthless. Now, how was you able to sell that option for more money than you bought it for, even though Apple never reached that strike price? Well, option is all about possibility. As Apple grew more, the possibility of it possibly reaching 500 grew, and it grew. The possibility grew. So because the possibility grew, the option contract grew as well. That's the reason why an option contract will go up, even though the price has not been met or will never be met. It's because of possibility. The possibility of it. And it's actually described in the Greeks, all of these things, all these things imply volatility, all of these things describe it technically why that happens, but the high idea of that is that as the possibility goes up, the option also goes up as well. So talk about SoundHound, we'll talk about that at the end of the hour. Is Alpha a meme coin? I don't even know what Alpha is. Oh yeah, I've heard of it. Ethereum short squeeze. They could be, and we'll talk about Ethereum for a second. MicroStrategy, like I said before, I think MicroStrategy is an illegal trust or an unregistered trust, and I think the premiums will eventually collapse. And what I mean by that is, we talked about this last episode, but I'll talk about it again. I also put a video up about it, is that MicroStrategy only owns Bitcoin now. They got some people that manage that. That's a trust. A real estate investment trust, if you guys don't know what that is, it's a bunch of people in an office that manage a bunch of real estate, and you can buy portions of that entire ownership. You can buy 10%, you can buy 1%, you can buy less than 1%, you can buy a share in that trust. Now, the trust can take out some, the thing about this trust, a real estate investment trust, is that it's bound by law to do certain things. The people that work there can only take a percentage of the gains in order to fund their operation. The people that work there have to follow certain rules and regulations in order to run that trust. That trust cannot be valued higher than either the potential or the potential of the real estate. Real estate has potential too. It cannot be valued higher than what the potential is or what the underlying real estate is. Now, the market can drive that somewhat, but it never is much above that, right? And it's based on the profits that these real estate generates, or it's based on the increasing value of the real estate. Now, that's a structure that exists. You can buy real estate investment trust. You can buy AI real estate investment trust. And that's actually a big move right now, is that AI has to expand and they need data centers. There's a real estate investment trust out there that actually have data centers under their trust. And that's actually a good big opportunity if you want to look that up. We'll talk about it on one of these episodes. So what MicroStrategy is doing is the same exact thing, except real estate, you can take a real estate property, you can improve it, and the value can go up a lot. You can take a real estate property, you can have it in an area that's gentrifying, and the value goes up a lot. You can actually take a real estate property and you can affect this value by the work you put into it. A real estate investment trust is good. It's actually more of a stock than MicroStrategy. Now, it's not a stock, but it's more of a stock. MicroStrategy only has Bitcoin. And there's nothing MicroStrategy can do. Let's take 1 unit of Bitcoin, which is let's say 1 Bitcoin. There's nothing MicroStrategy can possibly do to affect the price of that Bitcoin. Michael Saylor can go around talking, but he doesn't affect the price. So because of that, it's a trust. So the value of the company should be directly related to what the assets they have under management. That's what a trust is. It's worse than a real estate investment trust because at least we can improve properties. At least we can buy undervalued properties and improve them. MicroStrategy doesn't do that. So the MicroStrategy is trading at a premium, higher than if you take all the Bitcoin that they own, you divide it by the shares, people paying 3-4 times more than what the underlying Bitcoin is worth. That's called a premium price. Premium prices exist when there's high demand in the market. Same thing happens with Louis Vuitton purses. You have intrinsic value. What the Louis Vuitton purse is worth as a bag, as a thing to carry, maybe worth $200. It's well-made material. It has high material. So if you take the logo off, it's worth $200. You put that logo in there, it's worth $3,000. Now, everything above that $200 is what's called premium price. It's a premium that you paid for that Louis Vuitton purse because you really wanted it. And it was above the intrinsic value, right? The same thing happens with this asset, right? Is that we got MicroStrategy. The intrinsic value is just the purse. That's what that company's worth. But they charge you way more because people are excited about MicroStrategy and they really want that stock. Now, the problem is that this is all in good in an up market. In a down market, we got the intrinsic value, we got the premium value. That premium value collapses. For example, let me tell you, let's say we were in a Walking Dead scenario. Let's just say we were. That's a chaos. That's a calamity that happens out of nowhere. A Louis Vuitton purse, the premium collapses on that. Now we're down to the intrinsic value. What is this purse for me that I can carry my tools, guns, and ammo in? That's all it's worth at that point. That's because a calamity happened, premium collapsed, we back down to intrinsic value. Now with MicroStrategy, if the Bitcoin market collapses, the premium value is all gone. And we back down to intrinsic value. Now, intrinsic value is going to lose too because Bitcoin went down in value too. So MicroStrategy will be at a fraction of what the overall price is today. That's a huge, huge risk. I'm not taking it. I bought options on MicroStrategy right after the election. I won't touch it no more. Now, it could keep going up. It may go up even higher, but one day that scenario is going to happen. One day it will happen. I don't know when. It could be 2 years. It could be a year. I don't know. But the risk of it happening is too high for me. So how do they say Ripple is a trust? Remember, Ripple is a company, XRP is an asset. They're connected, but they're not the same thing. People got to remember that too. That's why somebody asked, how do they say that Ripple is a trust? Ripple is a company. XRP is an asset. Those assets are held in Ripple's trust. That doesn't mean XRP and Ripple are the same thing. Ripple has a trust. They have XRP in that trust. They don't go around selling stocks in that trust. And remember, even Ripple has a company on top of it, trying to increase the value, making new technologies. They created RLUSD. They're creating technologies. They're creating an entire payment system. It's not just XRP. The payment system and mechanisms, the software that moves XRP around the globe are being developed by Ripple. Now, that's what a company is. Somebody who takes an asset and creates value from that asset. That's what Apple does. They take hard materials out of the ground. They take those silicone, they take that cobalt and all those types of things. They convert it into a phone and then give you the phone. They took those raw assets and created something. That's what a company, that's what a company with stocks is supposed to do. MicroStrategy is doing that. That's why they're going to collapse one day. So, any more questions before I talk about Oklo and finally Onyx? We got about 20 minutes now. I'm also going to start, if you're in the CNC, I'm going to start taking one question at the end of the hour every day from now on. So you send me a video and put a channel in the CNC. Send me a video and I'll play that video and I'll answer the question. Every episode, I'll do that from now on. If you want to join the CNC, go to jointhecnc.com or click the link that's going to be included in the comments. If you want me to you want me to discuss something next week, put it in the comments as well. And I'd really appreciate that. Also, like the video. If you haven't done so, please subscribe to the channel. Got 1,200 people on here today, so that's good. So last thing I want to talk about is Onyx, and then we're going to talk about Oklo to finish it, right? So now Oklo is very, very interesting. So I haven't really been following that coin, but I think I'm going to invest some money into it. And I'm going to tell you why. Is because I knew about Onyx coin. I knew that JP Morgan created it. I knew that JP Morgan's blockchain unit developed and created Onyx, but Onyx since then have moved on to almost an open source type community. It's not open source, but it's similar. And now other people are developing, also managing that asset and developing for it. So I think that Onyx coin does have a lot of potential. It's up almost 1,100% in the last 30 days. That's why a lot of people are asking about it. It's still very low. Let's take a look at where Onyx is at. Let's take a look. Where's Onyx? Yes, right now it's at 91. I think there's a good opportunity with Onyx coin. Now, I don't think it's as strong as XRP. I don't think it's as strong as Solana, risk versus reward wise. And when I say risk versus reward, I'm not saying that you won't see more gains in this one. I'm not talking about gains. I know a lot of people on YouTube, I know a lot of people on social media only tell you gains. Get the gains, get the gains. Well, this dude doesn't know what he's talking. But gains are not everything. If you don't manage risk over your lifetime, eventually something bad will happen and you'll lose it all. You can win, you can make 10 times your money in the first investment, 10 times your money in the second one, 10 times your money in the third. On the fourth one, you don't manage risk and lose it all. If you don't manage risk, eventually the Grim Reaper will come calling and he's going to reap all your money back to where it came from. And that happens to a lot of people. You cannot live your life not managing risk. But Onyx coin has a little bit more risk, but it also has a lot of potential. So I'll tell you, I'll look at it. I'll tell you on Wednesday if I do invest in it. I just wanted to look over it. If we go back over the all-time chart of Onyx coin, we see, get rid of this cookies. Every site asks if you want to accept cookies now. That's crazy, man. We don't even have that law in the United States. That law is in Europe. But now they put it on all the sites because Europe did it. And they want to regulate AI. I do not want them to regulate AI. We're going to have this foolishness and all this stuff in AI. AI should be kept natural. And I think we need better, we need other people, like more diverse, and I don't mean diverse racially or ethnicity, I mean diverse completely. Democrats, Republicans, people from the South, people from the North, poor people, rich people, all this stuff has to be included in AI, in the data and also on the development management side to ensure that AI going forward is safe for everybody and it also includes everybody. But I don't believe in government overregulation. That's why we got these things at the bottom of the screen. Every single website, you got to click that. But if we look at Onyx Coin, September of 22, it reached the all-time high of about almost 20 cents. Then it dropped back down to almost 0.2 cents. Now, if I look at that chart, Onyx Coin was created sometime in 2022. It did a spike up to 16, and it went all the way back down to 0.0024. Now, I look at that, and what is that? That's 50 times 10. That's a 500 time potential gain. A lot of people may come back into this coin. A lot of people are going to see that the JP Morgan link is pretty strong. That's a brand name that people remember. Even though they're not involved anymore, people are going to, especially when they talk about it, they're going to attach JP Morgan to it. So, give me a second. I forgot to plug this in. So when they hear about Onyx, they're going to hear about that JP Morgan connection, and then people are going to rush back into it. Now, the risk is also high that maybe that won't happen. Maybe that won't happen, you know. It could happen, but maybe it won't. So the potential is extraordinarily high. We're talking about a 500% time gain you could have. But the risk is a little bit higher than I normally would take. So I'm not gonna put all my money into it, but I may put 5,000, 10,000 into it because if you think about it, you put 10,000, and remember, I'm willing to lose 10,000. I put 10,000 in Millennia Coin. I knew it was a gamble. I even told people on Instagram, I said, well, I was probably gonna lose it. But it's a potential to make 10, 15 times my money, so I'm gonna throw it in and see what happens. I do that sometimes. This is not as bad as Millennia Coin or Trump Coin, but this has a lot more potential. So I may put 10, 20,000 into it, which I'm okay with losing completely. And if I lose it, well, but if I win, that's maybe 100 times gain. That's 200, that's roughly like 2 million if it plays out. So in that scenario, the risk is not as high as because JP Morgan is attached to it. So the risk is a little bit lower. Potential is a lot higher. It's 91 on the chart. We already seen an incredible gain over the last, if we zoom back on the chart and go to like, let's say a month, we see that during, this is what I like too, is that when Bitcoin spiked up around January 27, Bitcoin reaches close to, I think got to 208, 209 that day, we saw Onyx Coin pretty much follow that trajectory and got to it almost went up, you know, it went up from, what was it at? Yeah, it went up like what? Like 40 times, 30 times during that time period. So we can almost know with pretty close to certainty that it will return to that high when Bitcoin starts doing well again. Remember, altcoins in most cases are at an inverse, they have an inverse correlation with Bitcoin, right? Not inverse, but they have an exaggerated correlation. And what I mean by that is Bitcoin, it's always been like this in crypto. Bitcoin goes up a little, a lot of altcoins go up a lot. Bitcoin drops a little, altcoins drop a lot. It's called an exaggerated correlation. So I think the Onyx coin has potential. Bitcoin goes to 250. I think we can at least with Onyx get back to what is it, 87 cents that gives us a 300% return. But if it goes close to all-time highs, we can have a 50 or 100 times return. It's 91 on the chart. That means the market cap is still low. Remember, market cap is good for comparison. It's not good to, it's not valuable in limiting where something is going. Now, I still use market cap in comparisons, but I do not use it in limiting where things are going. So we can still compare. We can say Onyx Coin's market cap is 726 million. So let's just say, for example, if Onyx was able to get to, let's say, to play 50, let's say 50th on the chart. Let's say it got to 50. 50, the market cap of the 50th one is, so let me see, market cap is 1.8 billion. That will put us at a 200%, almost like 150% gain. Let's say it got to, let's say 35. That's 3.3 million. So 700, 3.3 million is 1, 2, 3, 4, 4.5 times from where we are today. So I can see Onyx getting to these levels pretty soon. I mean, but like I said, is that there's still some risk there. It could collapse. I haven't done any technical analysis. I haven't really looked deeper into it. I'm just telling you guys that I looked into it, I like it, and I may invest in it. On Wednesday, I will tell you for sure if I invested in Onyx. Any thoughts in Yearn Finance? Now, I put about 10,000 in Yearn Finance last year. And the reason why I did that, Jobani, I think that's your name, is because Yearn Finance for the last 2 cycles has also had that exaggerated correlation with Bitcoin. That means Bitcoin went up a little, Yearn Finance went up a lot. Now, that's the reason why I put some money in Yearn Finance. Now, I'm not saying it's gonna, that's another high risk play. And I do some of it. I'll put 3, 4, 5% of my money in the high risk plays. The other 95, I try to be more rational. But you can take risk with 3, 4, 5% of your money. If you lose it, it doesn't, it doesn't hit you that much. But I think Yearn Finance is a good one. I can't really see the board. Yeah, we'll fix that. So what we'll do next time is that we'll just put it on the screen. We'll just start, whatever we put up there, we put on the screen as well. So we'll try to do that next time. We'll put like me on the side and we'll put the screen up there. We can do that with like an HDMI thing. Yeah. So we'll try to do that next week. In the comments, anything you don't like, put it in the comments. We'll try to fix it next time. I appreciate all of you guys. So last thing I want to talk about, we got about 9 minutes, is I want to talk about, no, we got more than that. We got 20 minutes. No, we don't. We already over. We got 9 minutes. So we got about 5 minutes. So I want to talk about Oklo, right? Is that Oklo right now? Let's see where Oklo's at. So again, if you're just joined, please subscribe to the channel. We drop a lot of videos. We go live every Monday, Wednesday at 10:30. Oklo is down 54. We look at, let's look at, I got to set up trading view on here. So we look at Oklo, it's down today. We look at let's say year to date. Oklo, early in this year was at $21. Look at last year, because I called this out actually when it was under $1. I think it was under, yeah, it was right here when I said it was going to go up. It was roughly like, I think I called it out at $6. And people will attest to that. If you're in the comments, you got Oklo at under $10, because I talked about it on my lives on Instagram, and I said I was putting a bunch of money into it. And these guys to say, put the money bags in the comments. We made a bunch of money on that so far. We're up like 10 times roughly, 9 times roughly. So with Oklo, let me see, I'm gonna pull it down. If we look at the chart here, let me try to make it bigger. Yeah, maybe it's bigger now, I guess. So I gotta put this up some. F11. There we go. Oh, that's too big. So here we go. Let's just look at Oklo. We'll try to fix this next time so that you guys can. We'll fix it next time so it'll be on the screen as well. Also with us talking about it. So Oklo, $6. Where is it going now? Now you got to remember, Oklo is a nuclear power company. Oklo is going to do extraordinarily well in the future. And there's a simple reason for that. Let me bring up my notes here. All right, so there's the reason why I want to talk about this is because that's what my book is going to talk about. There's a huge opportunity here with Oklo. I'm going to tell you why. Because it's greater than just one stock. It's greater than what we're doing right now. It's actually something that is going on with our civilization as human beings. It's a lot bigger than this. Is that over time, our energy needs continue to go up. It will never be enough energy. It will always be more demand. That's how it is forever. And people don't realize this, is that there always is a demand for more electricity. We see what's happening with artificial intelligence. We see what's happening with humanoid robotics, which take a lot of electricity. We see what's happening with blockchain technology, which takes a lot of electricity. EVs, electric vehicles, a lot of electricity. Now, what's happening over time is that we're becoming a greater civilization. Now, there's a thing out there, it's called the Kardashev scale. I'm sorry, I always mess that up. And what the Kardashev scale says is that there's 3 levels of civilizations. The first level of civilization is that a civilization is able to harness all the energy available on planet Earth, right? So that means nuclear energy. That means that geothermal electricity. That means any energy that comes out of the Earth, we can harness that. Second that's second, some solar energy, right? That hits the Earth, we can also harness that. We get most of that energy. Second stage of civilization is that we're able to harness all the energy from our sun and our solar system. We built what's called a Dyson sphere around the solar system, which is a sphere around the sun, not the solar system, the sun, that brings in all the electricity. The sphere is made up of inverted or reversed solar panels, so we get all the energy from the sun, and then we beam that back to Earth. The third stage of civilizations is that we're able to harness all the energy in our galaxy. We can put a Dyson sphere around every sun in our galaxy. That's when a civilization is thought of to have reached its max potential. So we're moving along that path right now. Now, we'll never get there. We'll all be dead and gone. But just to let you know, the energy concerns will never go away. Oklo is a nuclear power company. Now, you take 30 pounds of uranium. That 30 pounds will power almost a small city for 20 years without having to be replenished. And the building that is done in is not much bigger than this. Now, that's a solution to all our energy problems. That's a solution to that's a short-term solution. That all of our energy problems will be solved with Oklo. Oklo's doing it a different way. Remember, things have changed. Nuclear power is not like it used to be. It's a lot different now. So it's a lot safer. It's a lot more efficient. It's not like on The Simpsons with the 3-eyed fish. So with that being said, hope you guys have a great day. Remember, drop in the comments any questions or any concerns, anything you want me to talk about on Wednesday. Make sure you subscribe to the channel. Make sure you like the video. I appreciate you, and have a great rest of your week.